Hi, I'm Shashank Bhargava, and you're listening to Three Things, the Indian Express news show. Earlier this month, the World Bank released its latest report on global poverty. And one of the things that it stated was that because of the COVID-19-led economic crisis and the Ukraine war, there has been an outright reversal in the poverty reduction across the planet, meaning that millions of people were pushed back into poverty because of these two events. And more importantly for India, there was another finding that really stood out. And it was that 80% of the people who became poor in 2020 from across the world were from India. Now, this was an alarming statistic, but one that did not surprise experts all that much, because India has historically struggled with lifting people out of poverty. In fact, it is estimated that over the past couple of years, despite efforts by the government, poverty in the country has actually been going up. Recently, Indian Express's Udit Misra wrote about this issue. And in his piece, he said that there is one country from which India can actually learn a lot about poverty alleviation. And that country is China. In this episode, we talk to Udit and take a detailed look at the lessons that India can learn from China when it comes to drastically reducing poverty. Udit, what was your reaction to the World Bank report and the fact that 80% of the people becoming poor in 2020 were from India? Because that figure seems very striking.
So, it is at one level not surprising that India was one of the worst affected by this. Partly it has to do with initial conditions. If you have considerable poverty to begin with, you would perhaps get worse far quickly. And this has much to do with the fact that when we talk about poverty lines and how many people are above or below that, we tend to obsess over that particular number, but we often forget the distribution around the poverty line, as it were, because there are a lot of people just above the poverty line, and that is a very crucial thing to understand, that means that there's a lot of population which is remarkably vulnerable, and with a little shock, it can actually go down. And one of the data that came out in that report was that estimates suggest that around 595 million people in India live at less than $3.65 a day. These are not regular dollars. These are purchasing power parity dollars. So they translate to around 86 rupees a day. So, 600 million Indians are living at less than 86 rupees a day kind of consumption levels. These are fairly stark numbers.
Yeah, and 86 rupees per day is really, really low. And we've talked about this previously as well, that lifting people out of poverty in a way that economic crises don't completely set them back is a big struggle.
Yeah, the poverty lines that we are talking about are extreme poverty lines. The extreme poverty line is 2.15 international dollars on PPP basis, and that is around 46 rupees. So we are saying people going up or below that, 46 rupees daily expenditure, but those are really extreme poverty lines. So if you keep increasing this number to 86 rupees to 100, 20 rupees, you'll find that 80%, 90% of your population is below that, which means that they are hugely vulnerable, and even minor shocks will pull them down to very stark levels.
Right. And the other thing we know is that the estimates of the absolute level of poverty in India were going up even before COVID, right?
Yes. So one thing here is to point out, and there's so much confusion about poverty in India, is that there is a national official way of checking poverty, and which is to look at consumption expenditure, how much people are spending on a daily basis. That is done through survey, and that last survey, which was done in 2017-18, was disregarded by the government, saying that it is faulty. But, most academics don't believe that argument. They believe the survey was fine, and actually it was dismissed because it was showing that consumption levels had fallen for the first time in 40 years. Typically consumption levels do not fall, especially in rural areas, because, these are very stark levels. And that would have led to a massive increase in poverty calculations. So by those calculations, if some kind of a estimate is made, and some academics have done that, poverty levels had been going up even before. But yeah, broadly speaking, on official statistics, we do not know, but whatever informal or privately done surveys show that poverty was already going up.
Now, Udit, in a recent piece, you wrote that there are actually lessons that India can learn from China when it comes to lifting people out of poverty. So, to what extent has China been successful at doing that?
Yeah, so I looked at China for a variety of reasons. One is obviously the scale problem, because often when we talk about India for any solution, the scale is very different. So there's no point looking at a very small city state like Singapore or some place in finding a solution, which may not apply to a massive country like India with population size. So the reason I looked at China was precisely because it's a country which was poorer than India in the 70s, much poorer than India. And actually, I was just looking at data. It was poorer than places like Chad or Malawi. It was actually absolutely the basket case. And globally, it was thought to be this humanitarian crisis spot because, you have such a big country with massive poverty levels. In 1980, as it were, every third person on the planet who was poor was from China. It was that scale. But the other reason I also looked at China was because of the spectacular improvements they have made. So, according to a World Bank study, so it's not exactly a Chinese study, as it were. So from a World Bank study, from international extreme poverty standards, which I mentioned, 46 rupees for India. So a similar comparable number for China. China has pulled out 765 million people between 1978 to 2018, 40 years. And that translates to something like pulling 2 crore people out of extreme poverty every year for 40 years on the trot.
Yeah, that sounds like a massive achievement. 2 crore people annually for 40 years does seem like a lot.
That is an incredible achievement because, we often forget, it's very natural for all journalists and everybody to always compare ourselves with what happened to the developed world or what are the standards there. And we often say, but Europe does this or US does that. But we often forget that their improvements happened over centuries. Say a US grew at a small pace for hundreds of years to reach where it did. And here we are talking about a country which in just 40 years pulled almost 800 million people out of extreme poverty. Compare it to what India is facing right now. We provide free food grains, and that too just, basic rice and wheat to 800 million people. And that is just a very, not so tacit acceptance that, we have that level of stress. So it is that scale. If you think in terms of the size of population, after China and India, which is sort of a comparable size in population, you would not have a country of 800 million. So it is that scale of population, that scale of achievement.
Okay, so Udit, now the question is, how did China manage to do this? And how did it manage to do it consistently for 40 years? And in your piece, you mention a World Bank study that talks about this in detail. So tell us exactly what this study says.
So it's not one thing that China did. It was a lot of things that China did. So on the face of it, the World Bank report charts out 2 main reasons, basically 2 main pillars over which this achievement was made. One was that China's story is that of a rapid economic growth. And it's not just fast GDP growth, but it is fast GDP growth along with a broad-based economic transformation. Let me explain that. It's not just that, GDP can come from any one source. Economies can grow based on doing just one thing, but it may not actually bring about widespread prosperity. It may not actually pull people out of poverty.
Yeah, it could just be that a couple of companies are performing really, really well, and that is pulling up the overall GDP.
Exactly. Or in case of, say, Bangladesh, it's the textile sector which sort of dominates their economic growth. They may not be good at many other things. Maybe for their size and scale, it might work. That's the thing that they've become so good that they're dominating the world over. But for China's scale, they needed a broad-based economic transformation, and that is why it's of value for India.
And when you say broad-based economic transformation, what do you mean by that?
So typically, you would imagine that a predominantly agrarian economy, as China was in 60s and 70s, and as India was in 60s and 70s, should move from being predominantly agrarian to shifting its GDP and its employment towards industries and further to services. Because these are the sectors which actually produce more value. So when we talk about in economic terms, where will prosperity come or how will people come out of poverty, it's also about what you produce. So if you're only producing something of low value, which is typically happens in, say, agriculture, then it is difficult to pull millions out of poverty, right? If you are only one farmer taking care of a big farm, it's a different thing. But for broader thing, we need structural transformation in an economy, which is to say that you must have industrialization, which soaks up excess labor. And when you're in an industry, you're making cars, you're making different products, computers, those are value added, they are costlier products, they can create the kind of wages that will pull people out. And similarly for services, financial services, many of the things that we do. For example, India's IT sector, actually that sector is a massive engine for growth for India. It pulls people into a totally different level of consumption and prosperity. But not every sector is like that. So that is one big strand of what happened in China, which was rapid growth with broad economic transformation.
Right, but changing an economy that is primarily agrarian is a big challenge. One of the reasons being that you have to invest a lot of money in infrastructure. So talk about that challenge and how China made that shift.
So, there were 4 broad strands that the World Bank study sort of identified for how China brought about this rapid growth with broad-based economic transformation. One was it grew its agricultural productivity, which is the starting point because you're predominantly a rural agrarian economy. So where do you generate value? You first generate value in whatever you're doing. So raise productivity in the agrarian sector and then slowly build your industrial sector. Because, services sector comes into an economy when people have the money to demand those services. You will not be demanding very high profile, costly banking or financial services if people do not have any money, right? So they can come only at a particular stage of the economy. You cannot imagine that all of a sudden you'll go to a services stage. So you start investing in industrialization. And while you're doing that, what China did was to manage the urbanization process, the migration from rural to urban areas. Because if you do not manage it, then you can end up with something what we are seeing in India. We are seeing cities like Gurgaon, which grew very fast. Like within a decade, they went from the ultimate city to the maximum city to a dying city, right? Because there was no planning, there was no understanding of what are the pressures, whether there's enough water facilities, sewerage, there's enough planning or not. How many people come into that? So you have to manage your urbanization process. You have to manage your rural to urban migration. And the fourth part of all of this, which sort of underpins, is infrastructure investments. Nothing will happen unless there is considerable investments in infrastructure and credible infrastructure, which actually stays.
Yeah, and in that sense, China did invest a lot in infrastructure. It invested in good roads, houses. It relocated millions of people from remote rural areas to apartment complexes, sometimes built in new villages where economic activities could happen more easily. And this was part of their broad-based transformation, which is the first pillar of how China lifted people out of poverty. But also, why could this not happen in India? Because we also invested a fair bit in infrastructure in the beginning, right?
Yeah, so obviously India also did. We built big dams, we tried to make more roads. But again, the state capacity was always an issue. That was one on the infrastructure bit. And this government is again focusing on the infrastructure bit, saying that we want to invest more. I don't think as much has happened as much as is promised or talked about. Also, in India's case, the industrial process never really took off. It just floundered. And we very quickly went to the services stage. And that really has undermined our ability to actually pull a lot of people out of poverty, because there are still way too many people in the agrarian sector, in the rural sector. And we need to pull them out. Not all of them will come into the services sector, because services sector require a certain amount of skill set, a certain soft skill. Even to become a guard in a bank or become a waiter in a restaurant, you need a certain soft skill. Whereas to work in a factory, you can employ far more people without requiring those soft skills. And they can, from one generation to another, actually then graduate. Those families can graduate to very different levels. And we've failed to actually do that transformation. And that has been a massive miss. And part of that trouble could be that we always focused on very capital intensive industries. As academics I talk to, they say that India never realized that its labor is the main thing. It's the core competence here. So if you were to focus and become better at labor intensive industries, if you promoted that, then we could have actually created more employment for people.
Okay, so we have talked about the first pillar of China's transformation. Now the second pillar involves the government policies it implemented. So what did it do in that regard?
Yeah. So what China did was three things. One was an area-based poverty alleviation strategy. So you realize that a particular area is really poor, and you target that area to reduce the extreme poverty there, either by pulling people out or creating infrastructure that they can do things better. That is one strand of what they did. The second thing that they did was about social protection. We talk so much about social protection, welfare, some kind of a social safety net. What's the difference between a poor person and a rich person making a mistake? A poor person, when he or she makes a mistake, they can fall right back into extreme poverty, whereas a rich person will be able to survive those shocks. And so social protection is very important in what China did, is to provide some kind of a social safety net. And in all of this, the third thing that World Bank points out is that there was a targeted poverty alleviation strategy. And so they were targeting each and every government policy on redistribution, focused on those people, as against saying we will just generally spend on, say, health or education. They had a very clear strategy on reaching the people who were actually the poorest. And that made whatever gains that came from higher growth in the hands of the government, they were much more focused when they were spending it. They were more efficiently spent.
And Udit, this is not what India is doing right now, right? Because it seems that some of our policies focus on trickle-down economy, where instead of targeting areas that are poor, we are giving tax breaks to the rich in hopes that they will create employment. And that's how we will lift people out of poverty.
Yeah, so I think, there is this notion that India is following right now, and one could say more broadly since 1991 economic reforms, where we said that, okay, state involvement is not working. We should just open up the economy and let's see. And definitely that has had its salutary effect. Private sector has brought about massive prosperity as it grew, but it has also increased inequality numbers also. And you can create a lot of social unrest. And in particular, the most recent strategy that this government is employing since 2019 is about, or even 2014 onwards, is about, minimum government. Now, it is not very clear that for a country with the kind of tremendous requirements on, say, poverty alleviation, you can actually believe that the government can just sit on the sidelines and hope that all solutions will come from the private sector. And hence we see now finance minister sort of getting exasperated that we've given tax breaks and we've given a production linked scheme, where government is literally subsidizing production for private sector. And yet private sector is not coming forward to invest more, right? Because at the heart of the matter is the broader poverty story. The income levels are lower. There's no demand. That is the problem. That is why it's stuck. So our approach is at some level sort of missing out the point that government's role has to be far more active, perhaps for a country like India, than what it might be at this current juncture in, say, West or US. So that definitely is a part of the debate.
Okay, and the other thing here is the point about safety nets that China provided. And although recently we have seen the US give direct cash transfers and even the UK putting a cap on energy bills, here in India, this is seen by some as giving handouts or reveries, as they are calling it. And this is essentially being criticized. So how do you view this issue?
So this is quite a remarkable thing that we see in India in the last 8 years in particular, because every time you have a crisis, the government goes back to two policies in particular. Those are the first two ports of call. One is the National Food Security Act, which is to give free food or additional food. And the other is the National Rural Employment Guarantee Scheme, the MG Narega. And both of these were berated by the current government as doles, as the politics of dole. They said that this would, and there's this whole army of so-called intellectuals who are saying that this is a way to make your population lazy. This is not the way you can actually provide any real growth. This is holding back India's growth because you provide them free food and free job, and why would anybody work? But we often forget that, the kind of extreme poverty that we have. So it's very important for India to understand and not get derailed by this whole narrative of whether this is a freebie or why can't we look at freebie for the corporate tax cut? That is also a freebie. Money that could have come to the government is now in the pockets of the big firms, and they're not actually using to invest it. They're just giving dividends to each other and their stock market value is going up. So you have to understand that this whole notion of dole, for whom? We are the poorest country in terms of the number of poor that are there in the world. Why wouldn't we want to make a direct intervention and pull those people out to a state where they can participate in the economy? Nobody's make them middle income people. We won't be able to do that. But bring them to a state where they can participate in the overall economy.
Okay, so far we have talked about the first two pillars, the broad-based transformation leading to economic growth and government policies to alleviate poverty. Now, the third pillar that the report mentions is China's effective governance. Tell us about that.
So now we typically think of China, or frankly, we as part of the larger Western narrative believe that it would be a strong state and which would just push people to do whatever it wants. But actually that is not true at one level, because perhaps China when it started off, it was not the kind of strong state. It was a very poor country and it didn't have such a strong state that could actually do everything. What they did manage to do was they provided effective governance. And now, how do you sort of figure out what is effective? For example, a very key element of their governance was decentralization. This runs very contrary to what our notion of a strong state is. If they focused on efficiency and bringing people out of poverty, they were looking at local solutions. So there was no one scheme that was sort of said, okay, this one scheme, national, whatever, yojana or whatever, will now apply everywhere uniformly. Like you cannot differ from it at all. They allowed for a whole variety of local variations depending on whether it works or not.
So no one nation, one policy, basically.
Yeah, exactly. So it's, you admit that for a diverse country, it's not just a big country. Like China, India is also not just one big country. It's a diverse country. People's approach, flora, fauna, soil, resources, they all change, So that is one aspect of the governance thing, decentralization. The other thing is making changes gradual. Now, in our mindset, China makes very stark, maybe despotic decisions. But that is not actually borne out by the evidence that we are seeing. They at least made the decisions in a more gradual manner. For example, the process I mentioned that, first increased the productivity in the rural sector and then slowly brought them out in a very managed manner to urban areas and then developed those urban areas under planning and infrastructure development to create value in urban areas. And they became the growth engines. So it was gradual. And there were no shocks to the system. We often think of shocks. So if you look at India's thing, we had this shock to the system in 1991. Now we look back fondly at the economic reforms, but it was essentially a grave economic crisis, the kind of crisis that Sri Lanka was sort of facing. We had run out of foreign reserves. We just were getting completely indebted. We just didn't have the growth and the money. And we turned it around. Thankfully, we did. But it was a shock to the system. People couldn't wrap their head around how to bring about a change. Similarly, another example is demonetization. A lot of people look fondly at demonetization, thinking that it must have solved everything, when actually it derailed everything because of the shock to the system, right? I don't know if this analogy works or not, but, how do you eat a hot dish? You can't eat it from the middle because it'll be too hot. and you can't wait for it to be all cold because then it'll be cold. So you eat at the periphery, right? That, I suppose, would be a gradual way of achieving a goal where you eat it when it's sort of hot, but take it apart from where you can actually eat it at a temperature where you can eat it. That kind of a strategy matters. So that was the third pillar.
Okay, and finally, the fourth pillar that the report mentions is that for China, some conditions were more favorable than some other countries in the beginning. What were some of these conditions?
So, China was obviously one of the poorest in the world. But oddly enough, in 1978, where this study in World Bank started, they were not as poor in terms of the social metrics, say education or health. And that is because a fair amount of investment into education and healthcare did happen in the years preceding that. And that was the sort of a fourth factor that the World Bank study pointed out, that at a time when they opened up, they had the health and education on their side to take advantage of this. And nobody's saying necessarily that they were the best in the world or anything. In fact, even after all this improvement in poverty levels, China is still, something like 80 odd ranked in, say, 190 odd countries on HDI parameters. But the point to understand is that if you were to compare one-on-one between the kind of poverty that was there and the kind of HDI metrics that were there, China was better. So that also was a crucial fourth factor that brought about, or that sort of helped that whole process.
Now, Udit, we know that China has an authoritarian regime, and the changes that we are talking about happened under that kind of regime. A lot of it was top-down. So how can such a transformation happen in a country like India? And are we saying that these changes could happen mainly because of a top-down process, because of that regime?
So one common notion that China is this autocratic, despotic state doesn't help matters, because there are many autocratic, despotic states. Not everybody has been able to achieve what China has been able to achieve. So there's obviously something else happening. And secondly, it was not autocratic or despotic in equal measure and at all times during that journey. If you read what happened to China's economy, you'll find that they went back and forth with when the state should intervene and when it should not. So it's a mixed picture. It's about not waiting for having all the governance structures, all the institutional. We think about India, we must have institution of this, Supreme Court is like this, or the CBCID, and whatever is not strong. People will say about media, all institutions, they're all weak, obviously. Now, either you can keep hoping that they'll one day become strong, like, say, a US or a UK, but the counter argument is that perhaps those kind of strong institutions will never allow a growth process of weak markets to develop, because they'll always come down very high, sharply on a weak market. They'll point flaws in it. So it's oddly enough, the process itself, your weaknesses are your stepping stones, is the notion that one understands from China's example. You cannot wait for either super growth or for super institutions to come and deliver you. You'll have to make do with some growth and then build some institutions and then use those institutions to improve the quality of growth and then use the extra money from there and again build. And they have done it in not so democratic manner, but actually they competed within their own economy. The local areas competed, as I mentioned. The decentralization allowed for local competition to come up with best solutions, which were then replicated wherever they could be. And so there was this fairly process that actually did generate a lot of good, while they may not have all the social or political freedoms that we hope to have or are constitutionally guaranteed or maybe exist in the Western world. But yeah, the process has to make do with what you have.
You were listening to Three Things by the Indian Express. Today's show was written and produced by me, Shashank Bhargava, and was edited and mixed by Suresh Pawar. If you like the show, then do subscribe to us wherever you get your podcasts. You can also recommend the show to someone you think will like it. Share it with a friend or someone in your family. It's the best way for people to get to know about us. You can tweet us at Express Podcasts and write to us at podcasts@indianexpress.com.